Hey, what up, traders? My name is Aaron Haynes. I'm with Side Hustles Biz, and today I'm starting a 25 trade case study. Something that I just wanted to go over with you guys. I'm going to be doing this over the next few days. You guys can follow along, check out my trades, see how well I'm doing. I think that you're really going to appreciate this strategy. You're gonna flip when you see the indicators that I use and the whole system in general. There's several different reasons why I'm doing this. I've been kind of struggling. I've been at the same profit taking for the last, I don't know, 3 or 4 weeks. And the traders that I've been trading with, they have actually all done something similar, and all of them have gone to a completely different level. It was like they were, if you're familiar with martial arts, it was like they were a jiu-jitsu blue belt, and now all of a sudden they're a jiu-jitsu black belt. They're dominating the markets, and I'm just trying to get up to the pace of my fellow traders that I trade with, and gonna hopefully get there. So let me I'm just gonna go over it with you real quick. So these what I put together here was just the trading rules, and also things that I have found that are gonna help me become more successful. So the things that I'm doing, I'm making sure that I'm eating right. Gonna be doing yoga during the day, working out during the day. No drinking. Since the coronavirus has come around, I've been very bored, so I had a few too many drinks lately. But I'm really just gonna treat this like a sport. I grew up playing soccer, and nothing mattered more when I was playing soccer than soccer. I had good grades. I ate right. I didn't do have any bad habits, anything that would jeopardize me being able to play. And so I'm gonna treat this exactly how I would treat a sport, like I was training. I'm gonna do everything that I can throughout the day to make sure that I'm going to be right there, alert, and finding the best trades. So how I'm gonna start this is every night I'm gonna be scanning the markets from 9 p.m. to 10 p.m. It's going to be Monday through Thursday. I am doing this on Sunday. I'm not going to be. I do have some demo trades set up. Just I'm trying out a new expert advisor. I'll show you that, and as I go through everything here. So how I plan on doing this, I'm going to meditate for about 15 minutes before 8 o'clock or after 8 o'clock or whenever my daughter actually goes to bed. I'm going to listen to some gong music on YouTube and just kind of settle my mind, try to connect and go to that place that's going to make me, that's going to get me into the zone. And then from 9 to 10 p.m. Pacific time, like I said, I am going to be on here. Oh, I'm sorry. After the meditation, I'm going to be doing a 30-minute warm-up. I'll do a separate video so that you understand more what the warm-up is. But essentially what I'm doing on the warm-up is I'm just going back in time. I'm just taking a chart, closing my eyes, scrolling backwards, and then I'm going to set it, and I'm just going to try to plan out a trade, find a trade, because you can just let the market play. So get myself warmed up so that when I get on here, I know exactly what I'm looking for. I've already scanned the markets at some level, and I'm ready to go. Oops, wrong thing. So let's just get into the strategy here. What I'm doing is I'm using something called a harmonic scanner. What the scanner does is it looks for harmonic patterns, such as what you see here, and then it sends me an alert and lets me know which pair it might be getting into the zone of where we want to trade. Now, it doesn't matter the direction. You'll see as I go through the charts that it doesn't matter the direction. I'm just looking for the best trade setups based on this harmonic pattern, these harmonic patterns. Also, too, one thing I can't show you right here because I don't have my camera going, but I do get these sent to me through a Telegram channel. So throughout the day, I'm getting alerted that there are trade setups, what I generally do is I just go through and I set an alert for me to come back to the charts later on. But I'm just going to pause this real quick, get a drink of water. I'll be right back. Okay, so Also, too, before I start getting into everything, what I do is that I really mapped out why I'm doing this. You know, why I'm doing this for myself. You'll see that I'm doing this for others. I have an organization that I really like to promote. It's called Junior Achievements. They do a K through 12 financial literacy. What they do is they're creating a level playing field between. There's a huge, what do you call it, economic gap in our society, and what they're really doing is they're creating a level playing field, and taking down those barriers for people to have an understanding of what how to be financially successful. They're doing this at, like I said, a 5-year-old level. So what they're doing is they're creating financial literacy for these people. They're getting them ready for work readiness. They're even teaching them how to own and operate businesses at such a low level. Once they get into like the junior high, high school level, they start learning more about investing, stocks, mutual funds. I'm a volunteer here, so I plan on becoming really successful at trading forex, and then I'm going to give back to these kids and help them get to that. I mean, just create the lifestyle that they want to create. I just think about my daughter. You don't know, she could be wanting to be a piano player in some nightclub, or she wants to be an artist just painting all day. Well, those type of people aren't going to necessarily be able to create enough money or income to have a house, to grow a thriving family, living paycheck to paycheck. We don't want that. So that's what this organization does. If you feel so inclined, they do have their website. I have their website here, jaaz.org. Feel free to go there. You can donate. Just right at the top, you'll see a donate now button. But really, it's once you got out of high school or college, did you ever think, man, if they'd only showed me how to use credit cards when I was in school, or I wish they would have just showed me how to use a checkbook. Well, that's what Junior Achievements does. They teach them all of that. I'm not going to get into too much of it here. I'll do another video about them, but they are really really on the forefront of getting our kids to be financially literate. So some of the tools that actually, let me go over the confirmations that I'm going to be doing. So what I'm trying to identify as I go through here, I'm looking for trend. I'm going to be doing top-down analysis. You'll see I look at the weekly, the 4-hour, the daily, the 4-hour, 1 hour. And if I need a tighter entry, I'll actually go all the way down to the 15-minute. I do check line charts. You'll see a lot of traders out there say line charts don't do anything for you, that it's only the candlestick charts, but you're going to see that there are reasons that you need to check out the line charts. So I'm going to show that to you. I'm going to show you some liquidity. Where is the money? Where are the big traders, the financial institutions, where are they trying to move price to so that they can capture all the liquidity and orders that are out there in the market? I'm going to look at market structure. I'm a big believer in the Wyckoff method. If you don't know who that is, you should definitely check him out. He basically created what we now know as financial institution trading. I shouldn't say he created, but he created the patterns and allows you to see what exactly is happening within consolidation. Why this is a big reason why people will say, they'll have the stop loss right here, and all of a sudden they're like, I got my stop loss taken out and then the price just went in the direction of my trade. Well, if you understand accumulation schematics through the Wyckoff events and phases, you will have understood why you are getting stopped out and the price just going in your direction. So you'll see me take a look at the market structure, Wyckoff. I'm looking for break of structure. Break of structure would be that if price was moving in one direction, making higher lows, let's say they were going up and it was making higher highs and higher lows, and then all of a sudden market turned. Is it creating new lows? Did it go back down below that higher low? So that would be break of structure. Very, very important to my strategy. I'm looking for institutional movement, institutional candles, engulfing candles. I'm looking for it to take out liquidity. impulsive moves. We're looking for something that we call an FU candle. It stands for FU, you know, FU with the middle finger, because it's taking out everybody's trades, their stop losses, and going in the direction that everybody thought it was going to go in. I'll show you that. Looking for mitigation. This would be price coming back down to an institutional candle. This is something right here that is very important that almost every single trader I watch misses. This is the entry. You want to know how to get a tighter entry? Pay attention. Next thing we have is our fib levels. Everybody thinks that the magic number Fibonacci level is the 61.8. People are always trying to get into momentum trades, so they'll look for pullbacks to like the 23, the 32, and then ride the price back up as it's going up. All those people are just getting, they're just handing their money over to me. So I look at my kill zone is the 70.5 to the 78. I'll show you that. The reason why 70.5, because it's supposed to be 71 to 78. Actually, it's supposed to be 71 to 88. Let me change that. But our strategy is so accurate that it misses it by just a few pips. So I pad the entry by a half a fib level. Then we're looking for imbalance, these long candles that you see price moving in. We're looking for, that's called imbalance. It's basically price just moving without any rejection. So we look for those type of areas because price is just going to fall back or just go right back through those areas pretty smoothly. I'm looking for a minimum of 4-to-1 risk reward ratio with a 2% risk. So I'm looking to risk 2% to make minimum 8%. I do have some trades set up here that I'm going to go over with you. You're going to see that all of them, the minimum or the smallest one is a 5-to-1 risk reward. No trading Sunday night. That is very important to my plan. I can't tell you how many times I felt like I read the market correctly, only for it to just kick my ass. So these are the tools that I'll be going over and using. I'm going to be using the harmonic scanner. I already showed you that. I'm going to be using the trading view for charts. I'm going to be using Wyckoff schematics. I just showed you that. I'm trying to follow the accumulation and distribution. I have the MT4. This is where I use for my trade execution. I use one click for proper lot size risk reward. You're going to see me use this little thing on MetaTrader that's going to automatically calculate the amount of my lot size to go along with my 2% risk. I'm going to use an EA to trade my to manage my trade, and then I'm going to use my trade journal to log all my trades, so that at the end of these 25 trade case study, I'm going to be able to go back and I'll be able to find, you know, what worked, what didn't, and then review all of my different trades. You can see that I have my trades already set up for today. I went a little bit ahead because I knew I was going to explain some of the stuff today a little bit more in depth, but this is essentially my trade journal. Here, let me... So I have the date, I have the pair, I have a screenshot from TradeView, the before. These are my confirmations that I have based on my rules that I had over there. This is going to be the after screenshot that I have like over here. I'm going to have the results. This is the direction, and then this is the risk reward. Look at this risk reward. If I win this trade right here, the pound yen trade, 26, what's that time? So it's 52% on my money. And that's off my whole account. That's not just a trade. That's my whole account. Only risking 2%. All right, so the trades that I do have set up, since it is Sunday night, they are in a demo account. But I'm going to go over the trades that I have, show you a little bit about how I'll be scanning the markets, and then just let you guys go. And we'll catch back up tomorrow morning to see what we have, or tomorrow evening to see how everything worked out. Okay, so how I do this, I get a feed, and I just basically click on each one, and it tells me which one I should be looking at. Oh, one thing I want to mention, I am part of a trading group, and so let me just show you a little bit about that. so you so you know why I already have some trades pending here. So a couple things. I'm part of this trading group. It's the Team Abundance 1000. So I come in here. You can see there's a bunch of information. There's people posting all day long. So I'll find different setups here. So I'm constantly in here scanning. So that's where I found all of my trades for tonight and that I have pending. So why don't we just go ahead and get right into the trades that I have set up here. All right, so the first one I have is the Euro Pound. Wish I could expand this. Let's see if that works. All right, so as we can see, this is in an uptrend moving into consolidation. So if we look at the Wyckoff schematics, where did I put those? Right here. We can see that it was trending up, and then we had this last up thrust. So you can see this last up thrust right here, and then we have a pullback, and now it's range bound. So what we're looking for, we start looking for equal highs and equal lows. What most people call them, of course, support and resistance. But I'm not looking for support and resistance because I'm looking to buy off of a bounce here. I'm looking for where price is building up liquidity for institutional traders to attack. See how we have some equal highs pretty much right in through here, and then all of a sudden this one popped its little head through. This is something that our trading group is looking for to happen. We're not looking for it to bounce off of here. We're looking for price to go through here, clean out the liquidity, because what is everyone doing? What is everyone taught to do? They're all taught to buy support, sell resistance. And what did they do? They put their stop losses just above those support and resistance lines. So if I'm an institutional trader, I can't just buy at a certain level or sell at a certain level. You're gonna, one, you can see that that's happening, and two, there's just not enough orders for it to be filled, and three, they're looking to make money. I don't know if the people that are trading, stocks and options and Forex really understand this. But when you buy into a position, somebody on the other side is taking that position, the other side of that position, and they're selling that position to you. So there's one person thinking that the price is going to go up. There's another person that thinks that the price is going to go down. So the only way for an institution to have their orders filled is to make it look like you need to be selling when you should be buying. Or it makes it look like you should be buying when you should be selling. I think of it like the crossover in basketball. Who's an amazing crossover? You had White Chocolate back in the day, Jason Williams. He'd come up to you, take that ball left, scoop it back around right, and go right around you. That's exactly what these people are doing. They're faking you out. They're making you think that this is going to be a place where you're going to be selling. So you're going to put your stop loss right on the other side of here. And what does this do? It comes up and just takes you right out. And at the same time, when there's a price break above these types of levels, what are most traders taught to do? They're taught that if price breaks up, they take the price rate back down, and then they buy, and boom, they're off to the races. So what happens is, so this is a daily chart. Let's look at a a larger time frame chart. Let's see what this actually looks like. Whoops. Okay, so this might not have been such a great fake out unless you were somebody that trades on a really small time frame. Let's just say that that candle wasn't there, right? So what are people taught to do? They see the price break above this, right? They see it break above it. Oh my gosh, I can't wait. This price is going up. I'm going to be buying right here. Buy right here. So they put all of their buys right here, and they put their stop losses at the bottom here. So what happens? Price comes up. Oh my gosh, it's going to go higher. It's going to go higher. It's going to go higher. So basically, they're filling all of their orders. They're filling all of their orders up here so that they can bring price back down. That's why you see a what do you call that? A morning star or something like that, a shooting star. That's why you see one of those right there. Because price, now they're starting to fill their orders so that they can come back down. And then with everybody thinking that the price is going higher, they're putting their stop losses down here. Well, that's going to accelerate price to come back down. We got the retest, and then boom. Anyway, you get my drift, right? These are trades that I look for all day long. Price breaks, boom, retest. We like something called break of structure, which would mean that price would actually have to come all the way down here first and then come back up. But you guys, you understand. All right, so let's take price from where we're at right now. As you can see, we have equal lows, we have equal highs. The overall trend is consolidating. Price is stuck right in the middle here. Usually, I'll probably delete this trade right here because I don't like it stuck in the middle. I'd like it to see it come back up. But if this were going to be the trade, if we were going to take a trade here, what I would be looking for, since price is coming down, it's coming down, even this right here, price right here, came below this candle. Price came back up, took out this high. There's another candle inside of here. Price fell back down. And then it created equal highs. Here, I'm just going to get rid of this. Equal highs right at the top here. So what is going to happen? No one knows for sure, of course, but generally speaking, price is going to continue in the same direction, moving down as it was before. It's going to pop its head just above the equal highs, and it's going to attack old order blocks, or where price institutions are trying to mitigate their orders back to. A lot of traders that I talk to, they feel that when institutions take the price up and they take it back down, that they are still in their orders of the up move here. So they're going to take the price all the way back to this area to mitigate and close out those orders, get all their money back, and then they're going to take price right back down. So what I'm looking for here is I'm looking for price to break up through here, hit that candle, and then come back down and, you know, make those lower lows or whatever. So that's why whoops, hate it when I do that. So that's why I had this trade set up this way, right up here. You can come all the way down here. This is a nice 6-to-1 trade right there. It will probably go past that because we have some equal lows right here. All of this right straight across, equal lows. And then also under here we have something that we call imbalance. This is a great, see how it's just one smooth candle, there's no choppiness in there, there's no wicks or anything. That's how you come up with the imbalance. It's just price nice and smooth, just went right through that area. So what it will find is price comes down here, institutions push it down here, and then what happens from there, see there's some more imbalance right in this area here. What'll happen is the algorithms, the computers that trade, they're gonna attack those areas, and what they're trying to do is they're seeking balance. That's why we say it's imbalance. They're trying to seek balance of price. So I would almost think that price comes up here and then shoots all the way back down here. So you could actually have a 10-to-1 trade. I have an expert advisor. What I do is, here, let me show you the parameters of that real quick. Let's see. So when I get into a trade, I'll always have, you know, my stop loss. Here, let me just do this. I want you to see the actual trade. So you can see I have a pending trade set up right here. Actually, I'm going to move this down. So my expert advisor is going to get me into a trade, or I mean price is going to get me into a trade, and then my expert advisor is going to manage the trade. It's going to go 30 pips and then move my stop to break even. It's going to take out, after 25 pips, it's going to close out 50% of my trade. And then from there, it's going to be managed under fractals. I'm not going to get into what the fractals are on this particular video, but this manages the trade so that when it comes down and it starts consolidating at certain areas, it'll get me out of the trade automatically. Obviously, if it comes all the way down to the price that I have for my take profit, it's going to just get me out automatically. Kind of like it right there. Alright, so that's that trade. Let us take a look at what is my next trade here. What happened to my journal? Here we go. So you can see in that trade what I had for confirmations was trend, break of structure, and Fibonacci levels. That goes back to my trade confirmations right here. We have trend. I need 3 confirmations in order to get into a trade. Plus this is a demo trade. I'm kind of, the expert advisor is actually brand new for me, so I'm kind of just testing it out and seeing if it works before I put it onto an actual live trade. So we have liquidity. Ooh, I didn't put that on my journal. Liquidity equal lows. Oh, we had imbalance as well, so there we go. Got some other confirmations there, so that gives me 1, 2, 3, 4, 5 confirmations. Not bad. Alright, so let's take a look at the next trade. The next trade that I will be looking at was, I'll just do pound Aussie. So here we have the pound Aussie. We have this huge, these other 3 trades are probably going to be better setups than the euro pound from what I remember. But we have a huge sell-off, massive sell-off. You can see there's lots of imbalance in through here. But we have something that we're looking for. First, I think I mentioned it was very important for us to find it, and that is break of structure. Break of structure is having new higher highs, or I'm sorry, lower highs and lower lows. Then all of a sudden we have a break structure. Now it's going to start creating higher highs and higher lows. See, we have that break of structure right there. We had this nice, this is what we call an FU move. So we had, oh, look at this, actually signature setup. Price broke up, cleared everybody out on the top there, broke down through, cleared everybody out down here, only to bring price right back up and then clear everybody out here. So now we have break of structure. So this might be a little bit more risky of a trade. You might want to see price come down to here to get in. But again, I'm demo trading. I'm just trying to get this EA to make sure that it works properly. Let me take a look. You can see this blue line is just, I don't know, why did I have that blue line there? Probably because of this. Alright, so we can see that this is actually in a Wyckoff schematic. Let me pull that bad boy up again. So we think that this is an uptrend because it's broken structure. So we need to find the Wyckoff schematic going up. Let's see, is this it? No, because it's already up. This is more like it right here. Yeah, this is so interesting. If I really want to show you this. So you see how price was coming all the way down, coming down, coming down. You see different areas of consolidation. It finally comes down. I'm trying to get this. All right. Price comes down. Boom, hits. Another one. So this is in this area here. We have price come down again. Price scoop up. Come back down again. I gotta find the right one. There's one that shows it's a spring. Really trying to find that. But you can see that price came down, broke this level here, which is this area right here. And as it comes up, it pulls back again and then shoots back up, which is exactly what this is showing right here. Pull back and then boom, it launches right through. And I believe we're in this area right here somewhere. So we're looking for what this little breakout right here is called the spring, which could be this right here. So this is why I'm actually long on this. So besides the Wyckoff schematic, which I was hoping it'd give me a little bit more definition or confirmation, I should say, on that, but it wasn't. But coming down, breaking through here, this area breaks up, comes down, boom, break of structure. So now we're looking to go long. So usually what we look for are what we call bankers candles, and that would be these right here, bankers candles or institutional candles. You can see that that lines my entry lined up right with the 70.5 with a stop loss down below here, and I had my take profit right up here at this other institutional candle. So let's take a look at my journal. What did I have? I had Wyckoff spring, so yep, that's what I was showing. The trend, break of structure, Fibonacci level, and then it was a 5-to-1 risk reward. So let me just put that back on here. Something like that. Where did I have it? 1.8183. Where's my stop loss? 1.8152. Oh, that right there. So right there. Perfect. So we'll just leave that there. See how that ends up. Yeah, you can see it's making up. That's such a beautiful FU move right there. Because see, look, it broke structure, but it also took out the equal highs up here. Some people say it swept the area. Boom, came down, took out this area. What an FU move. Anyway, love seeing that. Ever since I've been studying this strategy, it's been amazing. I can see the complete opposite of the market of how I used to see it. It's amazing. Some of the traders that I trade with, you're not even going to believe me. They're making like, one of them, he did a case study like this. On his third case study, he was making 86% per week. He basically just was trading the US 30, and then he was trading gold. Very, very successful. I'll have to show you a video on that sometime. But let's see, what's the last one? CAD JPY. We'll just look at that real quick. Did I already look at pound JPY? Did I look at this one with you guys yet? Looking to sweep this level here and then take this one. Oh no, I didn't, because this is a 26 to 1 trade. This is amazing. Amazing. If I can get this trade, oh man, this will make my whole month. But so what we have here, this one is pretty interesting. Look at this. Came down, came up, broke structure, came back down, right down to an institutional candle, and then rode back up. And if I show you this right here, price came right down to a little institutional candle right there. That little guy right there came right down to that institutional candle, and it took back off. So now we have this coming up in an uptrend, and check it out. Equal highs with a crap load of imbalance. Look at all of this imbalance. All of the agros are gonna love those areas. So what are we gonna do here? And what most retail traders are seeing, they're seeing price come right up to these levels. See how it come up to there, it went through, poked its head through there, hit this level here, and then everyone's putting their stop losses right above that. So they're also putting their stop losses just below this line right here. These are probably my favorite setups. You see these lower equal lows building up just above an institutional area all day long. And if we are able to capture this trade, look, there's nothing to hold it back until it comes, look, more equal highs. So we got equal highs, imbalance, another institutional level right here. Anytime you see fake outs like that, price pulling down, stalling, or looking, it's tricking people that it's going to go back up, because you think about it, this was a candle that looked just like that one there at one point. So you see this, people are thinking, okay, it's time to buy. This is coming down to an institutional candle. It's looking like this candle, we're going to ride it back up. But this is a trade I'm pretty excited about. This is something that I can just set my EA on. Actually, now I think about it, I'm going to change my EA settings on this one. I'm going to do 50 pips. Okay, so actually I'm going to close that one out 50% after 50 pips and let the rest run. Again, I'll do a video some other time showing you what the fractal is. That way you know how it's exiting my trades for me. The last one I have here was the CAD JPY. Let's just review these. So on that pound JPY, we had the Wyckoff spring. Where'd it go? Let's see. Essentially, this would be the Wyckoff spring. It hasn't shown up yet. It would come down and become the spring to accelerate the price higher. We also have trend. Yep, I showed you that. Breakup structure, showed you that. Fib zone, perfect. Our R is 26. So perfect. Perfect looking trade there. Again, these are all in demo trades. I don't trade fully Sundays. I wouldn't even be doing any analysis if it wasn't for I was trying to get people familiar with what I'm trying to do for the trade. So you guys can come back to YouTube every single night starting at 9 p.m. Pacific Standard Time. You'll see me going through the trades that I'm doing tonight, and then you'll see me analyze and pick up more trades, and that's when I will start trading, is Monday through Thursday. Let's get through the JPY. JPY. We have another long, so we have a long consolidation period here. This one looks most like the Wyckoff schematics that I had for us. So you can see that the spring has already developed. That spring here, let me see if I can find where it calls it that. I don't have all my schematics in here. I must be missing something. But you could see that the accumulation right here, boom, take right off. So let's see, we have trend, originally was up, broke through the institutional area here, pull back down, consolidated. All these people were building up their positions to buy. All these people were trying to buy at this line and with their stop losses underneath. And of course they get stopped out, comes right down to an institutional area. Looks like it's just former. And then so price pulls down, price pulls back up, takes out any type of stop losses that may have been there. People thinking that it was going to sell. People do that. They see this and they just ignore it and think that all of these, that there's still selling opportunities there. So I have my price, I want price to come back down to this box. We have a 9-to-1 trade, 31 pip stop loss. It's kind of big. I don't really like that, but it is what it is. Still only 2% that I'm risking, so it doesn't matter, especially on a 9-to-1 trade. So like I said, we had the Wyckoff spring, we have trend, signature setup. Let me see, I wasn't really looking at that. Oh yeah, signature setup, that's what this is. So our signature setup is clearing highs, clearing the stops here, clearing the stops here, and then price moving up. And it's a nice pullback, and then take off. Could be wrong with all of these, who knows. You guys have to tune in tomorrow to find out. So anyway, I hope you enjoyed it. I'll try to get more into the strategy. Leave some comments if there's something that you would want to know that I'm not talking about, something that I might be missing that you find is beneficial, might be important for you. So anyway, smash the like button. Tune in tomorrow. Thanks for enjoying or